Hey, what's going on, guys? This is Blood Phantom here, and today I want to talk about how to make the most out of your dividends with M1 Finance. And so I'll just go ahead and jump right into it. I think M1 Finance is really great, and the reason for that is the ability to purchase fractional shares. And what fractional shares let you do is compound a lot quicker than you can with any other brokerage, such as Robinhood or something like that. So with M1 Finance, you can buy just 1% of a share or 2% of a share. And as a result of that, if you have very high dividend stocks or ETFs paying you every single month or quarter, you can reinvest those dividends and have the money working for you immediately. So why don't I go ahead and just jump right into it. On the screen, I have here a stock, which is Gladstone Capital Corporation. And so this is ticker symbol GLAD. It pays a very nice dividend yield of 9.5%. So you're getting this every single month, yes, but it pays back. You're getting this every single year, but it pays you a small percentage of that, which is 9.5 divided by 12 every single month. And if you reinvest your dividends, the overall return on just yield should be more than 9.5%. So allow me to repeat that. Over the course of a year, if you're reinvesting your dividends, you should get more than 9.5%. And so I'll just go ahead and show you this tab right here. So I have my Robinhood set to invest my dividends automatically with my initial deposits as well. So on some days I like to deposit $25. So for this day in particular, it's $25, which is my money, plus the 97 cents, which is my dividend return. And so on this day, it's $25 plus 175. On this day, it's $25 plus 83 cents. So on and so forth. This account's going to grow. I'm not worried about just getting pennies for now. I know that pretty soon it'll be dollars on a regular basis. So yeah, jumping back into the video, why don't I go ahead and show you guys an example of what I mean with compounding. It's one of the most powerful things in the world. I believe Albert Einstein said that as well. So let's see what he means exactly. So let's say we have a stock, right? This stock pays us a 12% dividend every single year, and it's paying out every single month. And so let's say initially, in month 1 in January, we put $1,000. Cool. And so let's just see what this experiment is like over the course of a year. July, August, September, October, November, December, January. Cool. All right, and so our initial deposit is $1,000. So why don't we just go ahead and say this is our account value at any given month. Cool. And like I said, our dividend yield is 12%. So that means we get 1% every single month. So let's just see the dividend of that. Cool. So this is, so on your first month, you're going to get $10 because 1% of 1,000 is $10. And so on the second month, you now have $1,010. Cool. So this time around, if you reinvest your dividend back into your account balance, you're not going to get $10. You're going to get 1% or 1% of this, not this. So let's just go ahead and make both these values a formula. So this is going to be this plus our dividend, okay, which is again $1,010, and then our dividend will be this plus, or times I should say, our 1% dividend for that month. Cool. So let's extrapolate this over the course of a year, and let's just make this one over the course of a year as well. So at the end of the year, we will have, let's not take price action into consideration. This is just talking about the dividend. So you will have 1126 by the next year, and so your profit, of course, will be 1126 minus your initial deposit, which is going to be $126. So if you didn't reinvest your dividends and you just got 1% on the 1,000 and you put that in your pocket, or you basically wouldn't have enough to afford another share with that money, then you would have $120 because that's 12% times the initial deposit. So why don't I go ahead and label those columns? So this is compound let's just say profit underscore compound. And this is profit raw. Cool. Okay, so you're actually going to be getting 12.6% of dividend yield rather than 12% of dividend yield if you reinvest your dividends. Now, I understand that maybe you're on the go and you have to have money come into your pocket at the end of the month. Maybe you need help with bills or something like that. I understand that, but if you can avoid it, just try to reinvest your dividends. It's going to do really great for you over the years. And this is just after 1 year. So we're getting a 12.6% dividend yield versus 12% dividend yield over the course of 1 year. What happens if we extrapolate this to another year? Why don't I go ahead and show you guys? So January, February, March, April, May, June, July, August, September, October, November, December, January. Cool. Let's go ahead and pull this out. Okay. Now, when we add the dividend, we're going to have, at the end of the year, at the end of the second year, 1269. All right, so 1269 at the end of 2 years. So if we take a look at our profit again, so on the first year, we got $126 profit. Why don't I go ahead and label that? So this is year 1. Second year, we got, so 1269, so 269. Yeah, it's 269 minus our original $1,000 deposit. Sorry, 1269 minus 100. So that's $269. And this time around, if we did, like I said, if we just pocketed our dividend and didn't reinvest it, it'll just be this times 2. So $240 because that's 12% every single year. Now, so our initial balance throughout the first year in terms of our money was 1,000. Our initial balance in terms of just our money was 1,000 in the second year as well. So if we do this, let's say overall dividend yield. If we do this, 269 divided by the 1,000 in the first year plus the 1,000 in the second year, it'll be as if we're getting a 13.45% dividend yield, despite us not putting any money additional extra, other than the stuff that we're getting in profits. And if we do, but the thing is, if we just pocketed the money, we would just get 12% for the first year and 12% for the second year, because it's $240 divided by that. So I'll just do the math again. So this is going to be 240 divided by the 2,000, so 12%. So that's the moral of the story, guys. Take advantage with M1 Finance with compounding. This works a lot better also if you're investing money every single month. And if you do decide to open an account, if you don't have one, there's a link in the description below and you'll get $10. I'll get $10 too if you open up your M1 Finance account and fund it. So if that's your way of supporting the channel, then I'm all for it. So yeah, that's the end of the video, guys. I hope you enjoyed it. If you did, please hit that like button, especially if you learned something. Share this video with your friends if you want to compare M1 Finance to Robinhood. This is just one of the advantages of that. I think they're both great brokerages, but in terms of just new investors, I think M1 Finance is a lot friendlier and it's a lot easier to, I guess, do the right thing, so to speak. So yeah, I hope you have a great day.